song always reminds me of a Trump rally for some reason. The mosh pit going out front. Anyways, I've never been to a Trump rally, but for some reason that always makes me think of a Trump rally. So, comment allez-vous? How are you? Ni hao ma? You guys ready to go? Welcome to Forex.Today, the YouTube community of nearly 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans. That being said, let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. I love what we do. I used to be a venture capitalist, and therefore I looked at thousands of business plans. And guess what? This is by far the best business that you can invest your time and money into. Trust me on that. It's the purest form of business. And as an entrepreneur and as a capitalist, I love the idea that we buy and sell money. It's not like I own a little coffee shop and I buy little coffee cups and I buy the coffee grounds and I buy the milk and then I advertise and I pay my rent and you come into the store and then you give me money and I do all of that, pay all my bills, and at the end there's money left over. Maybe. I did all that for money. Well, let's just cut through all the BS. Let's just trade money. You see, the purest form of business. Buy and sell money. Hey, I want to sell $100. What will you give me for it? How many euros? How many pounds? I want to sell these. I want to sell this. What do you give me for it? Okay. Now, an average person just goes to Walmart and sells their dollar to buy some foreign-made goods, but eventually their dollars go into the interbanking system and gets converted into something else. Okay. If you buy a Porsche, this gets converted into Deutschmark or euro. Okay. So you sell it to buy something else. So cool. We cut through all that BS and we just buy and sell money. I love it. But we got to understand the path, the flow of that capital across borders for us to do two things, right? Buy assets that appreciate, like sell something that will depreciate, and then convert that into something that will appreciate. And then if you can get income on top of that through swap, golden. So anyways, ask questions, get involved. I will do my best. My name is Wayne. So you can say, Mr. Wayne, as they say in Georgia. Mr. Wayne, I have a question. Okay, that's a good way to start. If you want resources to help improve your trading, there are many, many, many links in the description below. There's a link to my book. There's a link to free training courses. There's a link to paid training courses. By paid, I mean $88 a year. And there's a link to tradersway.com, which is a foreign exchange broker. You're going to need a broker. So if you're brand new to Forex, great. That's where you start. You need to have a broker that can take your trades and place them into the interbanking system. So you need to have that. Now, if you're, let's say you've been trading for a while and you already have a broker, check out Traders Way anyways. What you'll find is the execution speed is fast, the spreads are narrow, the swaps are big, great customer service. You can have MT4, MT5, C-Trader, a bunch of other things, but ultimately you're going to need to have a broker that you trust, a foreign exchange broker you trust. And I trust Traders Way. They earned my loyalty and respect many years ago. I invite you to check them out, tradersway.com. And here he is, and here we shall be. And yen was very weak, and then is generally weak. Dollar was weak, and then has been generally sideways to kind of weak. Okay, nice little recovery in Kiwi, nice recovery in pound, right? Nice recovery in Aussie. Euro kind of just farting around after those big moves last week. And by recovery, you might remember as far back as Sunday, because I was trading on Sunday, these were all fairly low. This was high. These were all fairly low. And, apparently someone's been buying them. Sweet. Makes sense. Patrick's like, hey, yeah, Deutsche Mark was a long time ago. Yeah. Yeah, really? Yeah. Coolio. So you guys are looking good. What are you doing? What's up? Okay. What do you guys want to start with? You guys want to do commodities first? Let's do commodities first, huh? Oh, what time frames? Okay, hang on. Let me go back and quickly answer that question. Okay, these are all set on hourly. Okay, so it's kind of like what's happening now-ish today. This is sort of like today-ish. And of course, you can look back and see a couple of days, right? Here we are on the 9th. Here's the 3rd, you know, that kind of idea. But I have another one set, and I call them day trades, meaning these are all set to daily. Okay, which gives you a more broader look at things, right? Okay, cool. So let's go back. Let's take a look at commodities. And commodities have come down. Nice, which I've already planned for. I spent most of last week preparing you guys. Even though this is straight up like a rocket ship, there was plenty of reason for this to come down. Okay. Now, last week's setup, if you look at this, if you analyze this bottom predicts this top. Not that price. Nope, that's not what that says. Okay. Oops. That bottom here predicts that top. So that in of itself is an interesting place because it's a profit zone. So I don't believe this is bears. I believe it's profit taking. And then you'll see inside of here, inside the day trading group, we've been trapping. And now we're kind of getting back to like where we were. And I wouldn't expect much from here. Okay. But nonetheless, one of the things I've been saying is this is overpriced. I wonder how I can say this differently because I've said it so many times. How could I prove this to you? Let's go to the EIA. Let's see if we can find some information. EIA. Short-term energy outlook. It's usually in here where you get some seasonality. Oh, man, that's right. They keep moving it. Production by region. I want inventories. Price summary, data. Such great information. I'm used to having this displayed differently. I'm always looking for wonderful stuff. Gasoline prices, demand, nat gas. This is it. Good. Great. Let's get in here. It's a little too stretched out. January. So we're here. Okay. All right, so we're here. And one of the things I've been talking about is that inventories are going to go up and prices are going to come down. You guys I think you guys understand, as inventories rise, okay, you see that blue line there? Let's do it slightly different. Okay, you see this area right here? For the next 6 months, inventories are likely to rise. Why? Just trust me. Just trust me. Okay? Inventories are likely to rise. So let me do this in pink just so it stands out. Okay? This is the part I'm talking about. Okay? So as inventories rise, oil prices are more likely to fall. Okay? So we'll leave it at that. That's one way of looking at it. Let me do another search here for something different. November 2021. That's too far out. I need to show you something. I got to find it first, though, right? Crude oil futures quotes, maybe? I need to find a curve. I need a price curve. Full contract specs. I don't know why I'm on this. Hang on. Quotes. Yeah, okay, this will work. All right. Okay, the price of oil was as high as 95. Well, sorry, 94. We dropped back down to 89. Okay. Now, here's the thing. I wish we had this in a chart. But you see, I said oil was going to be farting around between $100 and $75, right? How many people remember that? I believe it's in my outlook for the year that oil will stay somewhere between $75 and $100. I just want to, right? I'm trying to show you how I get to these numbers. Okay? All right. If you buy oil today, you pay $89 a barrel. If you want oil a year and a half from now, you can pay $75 right now. So I wish there was a chart here. I wish there must be. Venue Globus. It'd be great if there was a chart. There must be a way to just chart this. First of all, let me ask you something. What is that called when the price of oil today, 89, is higher than way out in the future? I want you to think about how I taught you about an inverted yield curve. Some people think an inverted yield curve. So oops, that's not what I wanted to do, but let's draw a chart. Okay, got to make this smaller. But 1 year note, 2 year, 5, 10-year T note. Okay, 15 years, 20, and then eventually 30. And we'll call this interest rates. 1, 2, 3, 4, 5, 6, 7. Okay, so if we were looking at yields, I before E, yields. Okay. A normal yield curve would say if you invest on the short term, you should be given a small amount of interest. And if you invest for the long term, because you're taking on so much more risk, you should be paid a higher return. You understand that? And then in the media, you got to worry because people talk a lot about an inverted yield curve where maybe the Fed funds rate is 2 and the 30-year is less than 2. Okay? And then we call that an inverted yield curve where this is higher than that. Whoop? You got that? And a lot of people will say that that is a sign of recession. Okay. So what do you do when we're not talking about yield, but we're looking at these numbers now? And what I'm trying to show you is, okay, how am I going to do this? This is going to be price. Okay, $100 a barrel, 90, 80, 70. So this is price. And this is time from now. 1 month, 3 months, 9 months, 12, 15, 18. Okay? And right now, it's saying if you buy oil today, it's going to cost you 90. But if you buy it in 18 months, it's going to be 75. Okay? Just pretend all this lines up. Now, here's the thing. Typically, this would be the opposite because if you buy crude, so what you're doing is you're telling somebody, hey, I know you have crude oil and I want to buy it. And I want you to store it for me in inventory. That costs money. We call that carrying charges. It costs money to store it. Think about it. If you bought wheat and you're like, don't give it to me for 6 months, well, that person has to put it in storage for 6 months so it doesn't rot. And that costs money. And there's probably insurance and some other things on it, right? So it costs money. So typically, if you're like, hey man, I want to buy oil and it's $90 a barrel, but I want you to sit on the oil for 18 months and then deliver it to me. So they would say, well, you got to pay me $120 for that. Because all those extra costs would probably end up being so that you're getting today's price in the future, plus the cost of storage. Do you understand that? Now, this is called backwardation. And what you're probably being told by the media, the media, huh? You're a great educator. You're letting journalist majors teach you about trading. Anyways, the media will tell you there's a shortage of oil and you have to pay more because there's a shortage. But I just showed you there isn't a shortage. Where did I kill my EIA? Yeah, sorry, I killed my EIA. So I showed you we were within a normal range for this time of year. You'll have to go back and remember. Remember that chart that I got in the EIA, and it showed that inventories were going to rise, and there was a gray area above and below it. Those are the normal range of inventories for this time of year. So because we're inside of that range, and this time of year we're adding oil, and we're already starting that process, then that just kills the whole idea of what you're reading on some guy's blog or hearing on TV. Okay? Now, maybe you're not hearing any of this and you're like, wow, this is news to me. All right, well, backwardation is abnormal. Okay? And what you will be told, it's because there's a shortage. So I just proved to you there is no shortage. We are in an average range. The amount of oil we have right now is reasonably normal. So be careful. Now, there's a guy named John Maynard Keynes, and he's the guy that studied this. Ho, ho, ho! Ho, ho, ho! Wee, wee, wee! Now let's get into the knowledge. Dropping the truths. John Maynard Keynes came along. Remember, he's a demand guy. Okay? This supply side is probably wrong. Okay? And then, by the way, if you're doing supply side, you should study ManQ. Yeah, I know, another Harvard a-hole. But ManQ is a supply guy. But I don't think he would say what this is saying. This is just journalist majors going, prices are high because there's a shortage of oil. No, there ain't. Just do the research. How much oil inventory is there and what's normal? Oh, well, that's too big of a question. You see how, like, the media can just, they're too simple? High prices mean low supply. No. Sometimes that's true. In this case, that's not true because you just look and we have enough. We have enough. And we're going to have more soon. So this is wrong. So then you'd say, well, then what about the backwardation? John Maynard Keynes, a demand economist, remember, he's the guy that said if there's a recession, the government should just step in and spend money and create demand. Okay, so he's a demand side of the supply-demand equation. And what he's saying is, no. These guys are saying, remember, this is the suppliers now. They will sell you oil at $75 right now. Well, what does that mean? Think about that. Why would they do that? We'll sell you a barrel of oil right now for $75, but you're not going to get it for 18 months. So they haven't even really produced it. It's still oil in the ground somewhere. But why would they do that if it's $90 right now? What are they thinking? Type in a question mark if you're not sure. Otherwise, try to take a guess. What would the oil producer be thinking if they're willing to sell you oil for $75? Patrick says because they know, or at least they believe, price will come down. Thank you, Patrick. Yes. Okay? You see that? And so they're locking in the price. They're kind of hedging. They're just selling it to you now, and they know no matter what happens in the future, they already have a contract with you for $75. But what kind of psyche is that? Well, they're thinking down. And this is the exact opposite of what you're going to hear in the media. And they're saying prices are high today because there's a shortage of oil. I'm sure you're hearing that. Okay? And all they might see is recently oil inventories have come down. Well, it always comes down in the winter. You should know this. It always comes down in the winter. So what happens now between, now that we're heading towards spring and then summer, we build up inventories. So we have enough oil based on historical norms, and we're likely to have more oil in the future. And they're also predicting slower growth in the United States or the world. Okay? And that is what John Maynard Keynes said. So you can listen to your journalist major who is probably 27 years old and has never taken a business or economics class in their life, yet they're reporting on it. And they know the basics. Maybe they took econ 101. And in that class, they did, right, a demand and supply curve. Okay, price, quantity. Supplies are low because they look and inventories have been falling the last 3 months. So they see there's a shift to the left and that prices went up. And they're like, that explains that. Yes, if you have a high school level education in economics, that would probably be true. Cool. But they're wrong, of course. So there you go. Can I get a thumbs up for an overview of backwardation? You didn't even see that coming. Hit you like a freight train, son. Yeah. Thank you. Well, don't do the double. Do the triple. Yeah. Now, come on. That kid that streams on YouTube, does he know this stuff? Thank you, Luis. That's right. Yeah. Daniel Jurgen is the authority on oil. What, somebody asked a question? Kevin's helping somebody. EJ, I'm trying to find the question. Yeah. I want to start trading oil. Where can I read the news or the fundamentals about oil, Mr. Wayne? Yes. EJ, there are 2 books. Amazon.com. Okay. The prize. Oh, not the prize. Prize. Daniel Jurgen. Okay. You got to read this one. Okay. And you'll see, I think it'll tell you the number of pages. Where does it tell you that? Sort of more info, isn't it? Read more. Okay, 1,000 pages. Okay, the next one you need to read. I forget which order it is. I think maybe this is the first one, The Quest. And you read this one. And come on, load it up, read more. And this one is also about 1,000 pages. Okay? I read both those books in 2 weeks. Actually, maybe less than 2 weeks. Yeah. Wait, no, it was more than that. Hang on. I was thinking it was a summer class, but I wrote 12 papers in 12 weeks. So anyway, so it must, I don't know why it was only 12 papers. Maybe it was a summer class. Anyways, yeah, so in 12 weeks, anyways. So imagine you digest these 2 books in 12 weeks. It must have been a long summer class. But those are the 2 books. If you're going to be and look at this, I bought it in 2016. I just noticed that. That's interesting. So if you're going to be a trader of the energy complex, you should be able to sit down with a cocktail and a cigar, hanging out with other oil traders, and have a casual conversation about these books. Every energy trader knows this stuff. I can give you a complete history of the oil industry. Okay? So it would just be common knowledge amongst professional traders. So yeah, the prize was first. And so you would just need to know that stuff. That's all. You just need to know it. Now, will it make you a better trader? No, but you'll understand the industry as you should. You just should, right? So it's not going to teach you how to trade oil, but you must know the history of oil, and you'll understand the players better. And then if you understand history better, maybe you can better accurately predict the future. For example, why did the Japanese attack Pearl Harbor? What, the Japanese just woke up one day and you're like, you know what, let's bomb somebody. America's available. No. America cut the Japanese off from their oil supplies. As you know, Japan has no oil. Japan spends 100% of their annual GDP on buying oil. So America decided to cut them off. Doesn't matter why, that's a longer conversation, but it happened. America said, we won't allow Japan to have oil. War. That's it. Amazing, right? Oil. What was World War I about? Archduke Ferdinand got assassinated and the entire world went to war. No. You were taught that and you were taught wrong. Huh? The English converted their navy, which was what made them one of the things that made them a superpower. It's today's equivalent to nuclear bombs. The British Navy converted from coal to oil so that they can be faster and stay at sea longer. The other superpower, Germany, what? Needed oil. They're like, oh my God, we got to convert our navy to oil to keep up with the British. So they didn't have access to oil like the British colonies. So the Germans decided, you know what, we're going to build a railroad from Berlin to Baghdad. Well, the British can't have that war. Okay, so anyways, I don't know if you're going to learn that in those books, but you know, if you put other things together, you'll see contextually why things happen. Why did the Nazis roll into Czechoslovakia first? Why not Poland first? Czechoslovakia had oil. The big battles of World War II started in North Africa. Why were the Germans in North Africa? Remember? They had the big tank battles in places like Algeria, Tunisia, Libya. Why were the big tank battles there? What was there? Oil. Once the Germans lost that part of the war in North Africa, where'd they go next? Stalingrad. Why? They're on their way to Baku. What's in Baku? Oil. When the Russians, well, in that case Soviets, when the Soviets refused to surrender in Stalingrad, now the Germans had no oil. And so the Battle of the Bulge was being fought, and all of a sudden all the German tanks stopped. And the Battle of the Bulge was over. They ran out of oil. It's amazing, right? It was all of this was about oil. So if you want to be an energy trader and you like history, those books are a place to start. But then once you know a little bit more, depending on your own research and opinions and you know, whatever, you'll probably develop a different appreciation for history than what you were taught in school. Not necessarily. Okay? But interesting, right? So anyways, follow that. Gold, let's do gold quickly. Okay? Cool. Just moving from one to the next, one to the next, one to the next. Okay? So a dip to what used to be resistance is now support. You might have something happening out in this way. Bitcoin, still a little dangerous. The issue with Bitcoin is not that it's going up, but it's just, according to what has been happening, is a little overpriced. So you can see it performed okay yesterday, and then it came down. It's performed okay, but relatively speaking, that okay-ishness is, I would argue, not good. So anyways, be careful. It's a little overpriced. All right, so let's go out to dollar. Okay, piggy, 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 can't you see? So we had it trapped here, right? Here's the, like the breakout, the pullback up, and I think you would agree that this could be an area of concern. This price and then this price. So you got to be careful in here. I think if there are bears, I'm not telling you to be a bear, but if bears exist here, they're going to want to sell it very, very soon. So if you're a bull and you entered here, or if you entered here, this is a time when maybe you move your stop up a little. And if you're a bull and you want to buy again, maybe you get another opportunity here. And maybe it's already come and gone, okay? But remember, you have to ask yourself, where would a bull buy? And maybe a bull's already done it, not sure. Where would a bear sell? A bear would sell here or here. Okay? So you got to put it together in a plan. Don't just buy or sell. Okay? The bullish price action's already paid off, though. You can see that. Okay? And their target's probably here because we've already tested this, so they're not concerned about that. The next level is up there or up there. So I think we were talking about this even 2-3 days ago, you know, from 35 up to 36. Okay? Now, when we were below this, I was more bearish. And then once we're above it, I'm more bullish, just so you understand what that line is representing. Euro dog, just top of the range here. Okay. And it's done, well, essentially nothing. I think I was short at 1475, and now we're at basically on our way to 1450. So as far as sort of like a weekly point of view, this one's done nothing. It did more in an hour than it's done in 3 days. It did more in an hour last week than it's done in 3 days this week. Okay? So be careful. Darko's like World War I started in Syria. Yeah, right. Ferdinand was shot. I'm just suggesting that Ferdinand didn't cause World War I, is what I'm suggesting. It was an excuse. Okay, the total number of military and civilian casualties in World War I was around 40 million. There were 20 million deaths because of a Spanish duke got shot? You're kidding me. I don't believe it. I think we were ready to go to war anyways. Okay? Now, I'm not going to go into other theories and conspiracy theories and stuff, but I'm just saying, like, that doesn't make sense to me. Really. 21 million people died because the Spanish Duke was shot. I'm not so sure about that. Okay. So anyways, my Aussie dollar is going up despite my thought of it coming down. Once again, breach, pullback. Okay. This is the role reversal, right? This is the 21 EMA and so on and so forth. So anyways, up. Jay-Z made $500 million. Isn't Jay-Z Rockefeller? Oh, Rockefeller. Yeah, I'm like, wow, Jay-Z's, he made fun. Yeah. Yeah, well, you should go to the Winchester Mystery House. It's funny. The widow was crazy. She was a nutcase. Santa Clara, California, by the way, I think it was. Might have been San Jose, right on the border of Santa Clara and San Jose. Okay, so anyways, look, riding it up. How do you like my entry now? Ciao, pa-ching. The target, of course, as you guys probably already know, is way up there. Got a long ways to go. See the target? Nonetheless, mark the chart. Oh, there's always another chance, Orthodox or unorthodox. Faux show. Okay. I'll show you. I have a concern here, though. Okay, this gray zone is, I would say, let's do this. Kind of make it a little more specific, right? All right. See that gray zone? So what we were talking about here last night in the day trading group is how to buy a breach. And then I said my concern, though, is this price up here. But let's get off the 4 hour. Let's get on to like a 5 minute. Okay. And so, yeah, we were talking last night about trying to get into this to the upside. Depending on where you have it marked, for example. So like, let's zip into here. You just in the last 20 minutes, you've had your second chance. So you're going to be strutting around later today talking about backwardation? Unorthodox says, I just feel like it's too high. It is too high. That's what I'm trying to show you. But you can make money on a day trade, but then run into a swing trade down. So you just got to know. Why is the Aussie so strong? You know, all I can say is watch China. But Australia, let's say fundamentally, is relatively negative. But you should look on the right. You should look on the demand side. Where's the demand coming from in the near future? Okay. Here's our seek and destroy trade. You can see the trade plan from last week. Last week we said all the way up to this price. And then, of course, down. That's what Fibonacci is telling you. And it's taken a long time, but euro dollar took a long time. And, you know, whatever. So this is kind of working out. It's all right. What do you guys think of that trade? For you, it's a leap. For me, it's a fall. It's a long way down to nothing at all. Okay. What do you think? Below 9? This is basically a drop from 9.2. We're at 9.1. This is saying all the way down to 9.0. Okay. This is what we do in the day trading group. All day, all night, all day. We meet at 7 o'clock at night and at 2 o'clock in the morning. Seek and destroy, robbing and stealing. Cool, right? A little technical analysis. Noki just farting around. You see kitty cat. Cool. So I'll leave all that. Let's take a look at our friend, the yen. This is the yen. My only friend, the yen. I'll never trade euro again. All right. So here's the problem with this one is we've already fulfilled our destiny. One of the things we were talking about a week ago is like, technically speaking, the most you could expect out of this trade is there. Swedish krona, Edward. Huh? Seek and destroy. Okay. So after this move, we hit this. That's the logical target. This is sort of the recovery trade. And if you're trading it, the best you could hope for is that. That's it. That's it. It's done. Okay. And I believe I exited here on that trade. So I don't know if I want the second chance. Aussie blistering hot here. Okay. See this? See that? See this? See that? Okay. Breach. Pull back. Okay. Gone. Okay. This move here is probably triggered by stop losses. So we'll see. Next real challenge is up here. $83.5 maybe. Going for an R2. Well, the setup does not say R2 unless you're talking about Euro. Okay? You should be able to just read this chart. So it's not a debate. Okay? This says M4. I look at this chart, and if you're bullish, this is going to 84.78. $84.75.1. Okay? That's what it says. Okay. Piggy, piggy. Okay. Moving its way up. Nice little day trade last night. And then kitty cat. Okay. Slow as molasses, but textbook. Double bottom. Okay. Higher high. Okay. Drag this across. Higher low. And the target is right here. 92. We'll call it 62. I don't know what that number is. Okay. Easy peasy lemon squeezy. I will tell you where the bears are living. There are some bears right here, and there's some bears right here, and there'll be profit taking here. Okay? So if you're a bull and it does this, take some profit. Otherwise, take it up to 92.62. Cool, right? Now imagine this is slower than the other ones, but let's say oil goes up for the next 2 days. You're like, but Wayne, you just told me backwardation. Well, that doesn't tell us what's going to happen over the next 2 days. So let's say oil goes up the next 2 days because we are at support on oil. You should have this in your brain. I just showed it to you. So you should know oil. In fact, you should be able to draw an oil chart. If I just gave you a blank chart, draw oil, what it's been doing for the last 2 months. You should be able to do it. So anyways, based on what you should be able to see with your brain, if oil goes up, this goes up. And it would just be a bounce at support. Okay? What used to be resistance is now support on oil. Kitty cat, okay, moves up. So we're at 96 now. Sorry, 91. Sorry about that. 91. So there's 150 pips to 200 pips on this to the up if oil goes up. Okay, so drop into a smaller time frame. Trap the son of a bitch. Okay. 2 places to buy here. You buy at the bottom. Buy. Or you buy at the top, buy. Bye, bye, bye. Huh? Hey? Just pick your lines, man. Pick your lines. Buy at the bottom. Buy at the top. But not until there's a breakout. You could buy it here, but you'd be a fool. Or you could buy it here and you could be a genius. You're like, but Wayne, it looks the same. Oh, it's the same price. It's under the context of the situation. One is foolish and one is logical. The price is irrelevant. Cool. Lovely told your mum. Okay. And I think that's it. I'm spent. I'm done. Maybe I'll look at Rand here. Rand was producing last night. Peso was producing last night. Okay, Mexico's raising interest rates. We already know that. It's the whole basis. Remember, our trade plan was to sell it at up here. Why? What was the major reason we want to sell up there? Mexico raising interest rates. And a lot, too. So now it's down here. What do? I don't know. Probably take a training course because you're late, man. You're like way late. Okay. Mohammed says, so are you still bearish on the yen and strong on the bullish on the USD? The yen will stay weak for another month and a half, generally speaking. Yes, I believe that's true. The US dollar, okay, is strong in January, generally weak in February, and then generally strong again in March. I have not changed that. I've said that probably, no joke, 1,000 times. Okay? So, then you have to take this idea of what does generally mean. Well, between now and March, the USD will be strong again. Does that mean today? Not necessarily. So I started the month. Okay, I started the month. I bought euro dollar right here. Now, last month, we had euro dollar coming down. And it did come down. And then on the first minute of, of the first minute of this moment, this is a new week, and then a day or two later, it was a new month. So in the first minute of trading, which was a Sunday afternoon, on a Sunday afternoon, was that strawberry lemonade? Strawberry. On a Sunday. Anyways, I bought this here. Okay, Mohammed, which shows, okay, this is January. I said dollar would be strong. Okay. Then I said in February, dollar would be weak. So this is Feb now. Okay. And I exited the trade about here. Cool. So then I declared, and this is to the day trading group, after that period, I'm like, I don't really know. I don't know now. I said, I thought we'd get a big up in February, and we did. So I said, hey, man, do I expect it to go even more up? Like, at what point are my minimal acceptable, outcome? When has this? When is up enough? I'm like, I don't know. That could be it, or it goes up another 2 weeks. But or could this plausibly be the up we were talking about? Okay. You see what I mean? So now what? Well, I know between now and the Fed meeting, I believe that US dollar will be strong again. But is it today, tomorrow, the next day? I don't know. That's what technical analysis is. Okay, Mohammed? All right? So now what you do is technical analysis, and you try. So if you're like, well, I see that. Okay. You're like, you can sell lower highs, lower highs, lower highs. Do you sell here? No. But if this rolls over here, now you got, all right, top, lower high, lower high, lower high, lower high, and you might have some nice downward price action. So at some point, okay, you would start trading this way. But the issue is you have to already believe it's likely to happen. Now, if you're a bull, you're still a bull. You're like, why are you a bull? Oh, well, it was bullish last time. Good, then you bought this and we're done. What's the problem? You bought it, dropped to the 4 hour and you bought it. Not a problem. One of the most ridiculously easy trades that there is. Okay. Oh, Ryan's got those. Just ask Ryan. For the market, open zones. Yeah. So Mohammed says, so you're done for February already. Well, that was my concern. So again, when I was speaking with the day trading group at that moment, it was actually on Friday when I exited, which was when this was a big, nice candle. Right, I exited right up in here. And I told everybody, I said, look, I'm exhausted, emotionally exhausted, that I did all this trading, and then we get up here and I exit, and then I'm exhausted. The amount of energy it takes to predict that this market's going to 100% reverse is crazy, right? And that I helped set this up weeks in advance. Then I set this up weeks in advance, and then we're all the way here. But mentally and emotionally, that's exhausting. I don't know how much work you think I do, but I was exhausted when we got here. And I told everybody, I'm like, holy crap. I said, I can't believe it's like the third or fourth day of the month, because this was just exhausting. So I said, so now I don't know. And I said, so my goal over the weekend is to get enough rest and get some sleep, get some rest, do some research, do some pondering. But the idea is come back on Monday with a fresh mind, because Well, I really don't know if it's going to do this first and then down, or if it's just going to head down. I don't know. So therefore, I worked a lot with the group on trapping trades so that you can technically confirm or deny the hypotheses. And there's two hypotheses, of course. This is a double top. There's one hypothesis which predicts down. The other hypothesis is this is fundamentally related and that everything has changed and everything is golden and we're doing this. But I don't believe that. My email is wayne@fxbootcamp.com. Ryan's email is ryan@fxbootcamp.com. Let me ask you a question, though. Are you trying to get into the group using a mobile phone, a mobile device? Are you on like Android or Apple and you're trying to log in that way and you're not using a desktop computer? If that's the case, log in with the desktop computer. Cool. So that's it. I will leave you. Tomorrow we have CPI. Very important day tomorrow. And then also tomorrow is the swing trading group. So if you're in my swing trading group, remember, we're going to meet. I have to rush immediately. So I'm going to New York tomorrow. I do Forex.Today tomorrow morning, just like normal. Then I jump into the helicopter and fly out to ATL, jump on my first class ticket, baby, on Delta, zip out to the land in NYC, jump in the helicopter or whatever I'm taking, zip out to the Harvard Club, check in, get to my room, sit down, open up my computer, and it should be time to do the swing trading group. So if I'm 30 or 40 minutes late because something went wrong, like traffic or something, please bear with me. I'm doing my best. Literally, there's just enough time to do this live stream, fly to New York, get to the hotel, check in, sit down, open it up, and boom, right back to work. Okay. Can I join the day trading group? Yeah, sure. Join FX Bootcamp. The link is in the description below. Okay. World's Best says, hey, tomorrow CPI, where do you think the smart money will move to? Smart money's already moved. Okay. So you have to ask yourself, okay, if it comes out 7.3, 7.5, 6.8. What's the difference? And second of all, what questions are at play? What would a 6.8 or a 7.5 do to change what's already priced in? Because smart money's already priced everything in. So what would need to happen for it to change? What would the consequence of the change be? And then where would people move their money from where it is now? Now, I want you to think about that. I mean, I can blurt out an answer. It's not a problem. But I've given so much information over the 20 years I've been doing this stuff. I'm hoping that you are starting to connect these dots. But ultimately, does it actually matter if it's 6.8 or 7.5? No, it doesn't matter a dang thing. But it doesn't mean it's not important, and it doesn't mean it won't move the market. But yes, can you join my swing trading group? Can you join my day trading group? Yes. Just join FX Bootcamp. That's the first step. FX Bootcamp is $88 a year. 365 days. So hurry up, dude. Join. Gee whiz, what's taking you so long? So, peace on earth. May the pips be